Surge is a lithium exploration and development company. We're developing a significant asset in Nevada in North America. It is a claystone lithium deposit, right about 200 miles east of a well-known deposit called Thacker Pass.
So today we're gonna talk with Graham Harris of Surge Battery Metals. I can sense the sentiment a little bit turning, and we've known each other for a long time. We worked together with the Millennial Lithium deal. That it was something that you guys did that worked out really well. So, and it's all connected. So we're gonna dive into that. Let's get started.
I actually remember when I first started in the lithium business, driving around with your father and up in the Puna and having our windows blown out and in the car and coming back covered in dirt. And he was the one who introduced me to the vendor who sold Millennial Lithium, the original properties in Argentina. And that's how we've met. And then I got to meet you and your family. So it's been over close to 10 years. I think it was 2016. And we had a successful exit on Millennial Lithium, sold it to Lithium Americas. And then when I was looking for other lithium projects to be involved with, because what happened at Millennial wasn't just advancing the project, but I really enjoyed working with the team that we had put together. And I understood in the lithium space, it's not just a mining space, it's a chemical engineering space. And you need expertise in that area. And I was fortunate to have great people around me in Salta, in Millennial Lithium, many of them whom you know. And I was able to convince them to come along and join me for the ride here at Surge Battery Metals. And what stood out to me at Surge Battery Metals was, it's different. It's not brine, it's claystone, but it was the grade. The grade of the deposit was inordinately high, so high that it was suspiciously high, because it stood much higher than all the other ones. As an example, the average claystone is about 1,000 ppm, and these guys were reporting grades around 5,000. And Thacker Pass is around 2,800, 3,000. So it was significantly higher grade. And I really had to rely on my my people to come in and tell me if this thing was real, because it was too good to be true. But after a deep dive, we discovered that it wasn't. It was just a very high grade deposit, and we've been working at it for the last 2 years. So as I mentioned earlier, the Nevada North Lithium Project is located in Northeast Nevada. There is a map of our claims that I've just posted up. Control around 12 to 13,000 hectares is the main claim, but we also have 20,000 other hectares all around the area. Thankfully, we just did a JV, which tripled our land package. But the land isn't, it may be prospective, it may be not, but it's not something that we're going to explore. We have a multi-generational mine life with our own claim boundary, and that's really what we're focused on. Next. So investor highlights. Over the last 2 years, we've continued to de-risk the project. We put out a PEA earlier this year, showed an NPV of over $9 billion and an IRR of close to 23%. What was interesting about that is, again, it's the grade that drives the economics, and the economics are somewhat better than Thacker Pass, and it's all resultant from our grades being much higher than Thacker Pass. That's what drives this project. That's what's been driving us. We have a massive resource, multi-generational mine life. Now with the PEA, we're on to our next phase of development, which is the PFS. And we've just received the POO, which is the plan of operation, which will allow us to greatly expand our drilling. We've been working under a notice of intent, which is the first phase of exploration development in Nevada, which interestingly enough only allowed for 5 acres of disturbance. So the fact that we were able to unearth this massive deposit by only disturbing a very little area has really been amazing to me. And now that we can expand the drilling program with over 200 acres of disturbance, we'll be able to step out and infill drill. And really what we expect to happen is the results we expect to get will be better than what we put in the PEA, because the infill drilling, as we go from inferred to measured and indicated, the majority of the drilling will be in the higher grade areas, and we're expecting a pretty good bump in the overall grade once we complete this year's drilling. At the start, I intimated that I was able to convince some of the team to join me at Surge Battery that was with me at Millennial. Ian Scar, who you know quite well from Salta, Vijay Mehta, the guru of lithium processing, and Greg Reimer. Greg was the president and CEO who was with the company and convinced me to come and join him with my team. And he's really been the one that held it all together. Ted O'Connor represents American Lithium's interest. They own just under about 7% of the stock. When I joined the company with the Millennial team, they made a significant investment. They too were skeptical at the start, but once we put in some management, they got a lot more confident in the project, and they were the initial investors once I joined. So in this slide, we look at the 2024 resource estimate, which was resultant from the 2 years of drilling we undertook. And as you can see, it's a significant resource. Even at a 3,000 ppm cutoff, you've got 5 to 7 million tons of lithium. So it's a very high grade deposit. And what's really key that you can see from the schematic there is it starts at surface. So unlike Thacker that has to drill down a couple hundred feet to get to the high grade, funnily enough, all our high grade is right at surface. So again, that's going to greatly enhance the economics as well. It's open pittable and at surface. So here we have the preliminary economic highlights from the PEA we issued in June. After tax NPV, $9 billion. Pretty good payback, 4.7 years. We'll be tackling the high grade areas at the start. Phase 1 CapEx, $2.97 billion. Phase 2, 2.3. Phase 1, we estimate we're going to 60,000 tons, optimizing at about 130,000 tons in year 5. Average annual production, 86,000 tons, and peak year is year 6 at 109,000 tons. Also, we ran, as part of the PEA, we ran the sensitivity analysis. We're using base case of 24,000, which is the same as Thacker's using in their PEA or PFS. And we did that so that people could, directly compare apples to oranges. But we do have a sensitivity analysis in there that shows that even at 15,000, it still has a very positive NPV of close to $3 billion and IRR of 13%. Not the greatest economics, but that's the worst case scenario we feel. I mean, if you want to get silly, if you go up to 30,000, you've got a 15 billion NPV and an IRR of around 30. So, we feel confident in the long range forecast somewhere between 20 and 24. And this project is it can deliver very robust economics. We talked about that with the PEA we did. It's 42 years of mine life. When you look at what's interesting is the peak head grade is about just under 6,000 ppm. And as I alluded to earlier, Thacker Pass is about 4,800. And that's beneficiating the 3,000 ppm head grade that they have. We've been doing the same thing. And I think, Thacker's had a long time to beneficiate their ore from 3,000 to 4,500. We basically had 6 months in the PEA, and we beneficiated from around 4,300 to about 5,500. And we think we can improve on that greatly now that we're going to have some more time in the PFS. And we think we can get that head grade a lot higher than 6,000 ppm. And again, that's one of the key factors in driving the economics of this project. If we can get the overall resource up through the infill drilling, as I mentioned earlier, we're infill drilling in the higher grade areas, and we can expect a pretty good bump in the grade. And if we can increase on our beneficiation process and get that grade up even further, the higher grade that you feed through the plant, the less, the less acid that you're going to consume, the better the OPEX, and the higher the NPV is going to be. So we're really going to be rolling up our sleeves here this year and perfecting and really working on these PEA numbers and making them better. Well, this last slide here is sort of in the process right now. We announced on a week ago that we've been working on a joint venture with Evolution Mining, and that came about because in that land package we have, most of the land is BLM land, Bureau of Land Management. It was out of 14,000 acres, there was a small area in the middle of 800 acres that was privately held land. And that privately held land had surface rights that were controlled by Salmon River Cattlemen, and the mineral rights were owned 75% by Evolution. And we had done a deal with 2 private parties to have 25%. Joint mineral interest owners in an area that was really key to the project because it's right smack dab in the middle of our PEA. It actually defined us right in the starter pit area. And we've been having 2 years of talks with Evolution about, how do we, maximize this for both of us? We've always in our presentations allocated that mineral interest, which is theirs, to them. So we're not, this isn't news to anybody. People have always known that, they've had this piece of property and the mineral interest in it. A month ago, we were able to announce that we've entered into an LOI to form a cooperation agreement with the Salmon River. As evidence of that, we've been drilling on that property last year, the year before, and we're actually drilling there starting on Monday. And that's due to the cooperation of the Salmon River, allowing us access when they have the surface access rights. And they're cattlemen. I mean, their concern is water and grazing rights, and we respect that. And we've been working closely with them for 2 years, and I think we've got to the point where they trust that we're not there to drain the water basins. We've been doing a lot of hydrological work, developing that relationship, and let's try to keep it going because that's key. It's a very key piece. And the other part of that was the evolution piece. Now we've got to an agreement where they're going to vend their mineral rights in that property into a JV. We'll vend our whole package in, and we're going to own 77%, and they'll own 23% of the JV. They're going to further earn another 10% of that JV by funding us for $10 million to PFS. It's been a great couple of weeks where we've attracted a good partner. I mean, it's funny because Evolution, you would know them in Australia. They're a big Australian mining company. When I met them, they were $4.7 billion market cap, and I was quite impressed. And I'm even more impressed because today they're a 20 billion market cap.
Wow. Yeah.
Yeah, thanks to the price of gold. So, the fact they even paid attention to this is interesting. They're not lithium miners. They don't want to be lithium miners. They want us to run the project. This was just a good way for us to both monetize. They wanted to monetize their assets and what they have in Nevada. And they actually threw in not only the 75% interest in the 800 acres, they threw in their whole Nevada land package. We got 20,000 acres of land all through Nevada, which we now have a 75% mineral interest in, courtesy of Evolution. So we're excited moving forward with them. That's going to close probably November 5th is the closing date. We've announced it. Part of the LOI with Evolution was that we would need to raise $3 million. That was accomplished in about 24 hours. Yesterday, we raised $5 million, and that will close October 5th. So yeah, I appreciate that because it's not the easiest time in the world for
No.
lithium stocks. I don't like the price. I didn't like the price of where we had to do it, but it's what had to be done. And now going forward, we're fully funded. We have their 10 million, our 5 million. We'll get this PFS done in the next 15 months. Hopefully there's a better lithium market and people will care, and this thing will be de-risked to the PFS stage.
Yeah. I think that's like what you've done just to attract these caliber of partner and someone who's not just trying to buy you off by chunks. Like it's
Mhm.
as you said, they're not lithium miners, so it's a great.
Yeah. So here, we have on this slide, we compare ourselves to other lithium projects. And as you can see, our MPV is the highest, our grade is the highest. We do compare this a lot directly to Lithium Americas. That's the one that's most well known out there. It's similar. It's similar type deposit, being a claystone. We're using a similar flow sheet in terms of getting lithium out, so people can understand it, and that's the easiest thing to compare us to. So when you look at the slide, you can see that this project stands head and shoulders above that one. I do say stands head and shoulders, but we're not funded like they are. They have a big partner in GM. They have their $2 billion loan. They're full speed ahead. We're just riding their coattails. And as you well know, it's kind of analogous to me to when we did Millennial Lithium in Argentina. They had Olaroz and they were up running that, and they didn't pay much attention to us. And then once they looked like they were getting that near capacity and production, then they were looking to, how do we expand in Argentina? And then we had advanced our project down there to the point where, that was the one that came in and took over so that they had, a growth story to sell in Argentina. And I wouldn't be surprised if something similar happens here where we're going to advance this. LAC will get up, it'll get running. How are they going to, convince investors that they're going to grow and expand? And, I think there could be something again in the making, but all I can do is just advance this project, and whatever happens, happens. And maybe we'll get the same as before where we had 3 bidders.
That was an interesting time to be holding the stock because I remember having conversations that I don't want them to sell that price. That's not the true price. And I kept saying that until when it ended, it was like, yeah, I'm happy with that.
Yeah. Yeah. It went through that little phase. And I'm sure now, if you're happy with that, you're really happy with that now because the market fell off after that. But, it's a very strange market, as you know, because it's not like gold. We don't have futures. It's not transparent like other commodities. It's very difficult to determine what's the price coming out of China? Is that the real price? Nobody knows, right? So,
Yeah. Yeah. I mean,
you
it's
know,
better than it was, but it's still somewhat murky and, you can't know the full story.
no. And what we're going to hopefully see is, something like happened with MP minerals and rare earths in the U.S., where the U.S. will say, okay, we want a made in America policy. This is a strategic mineral. With the rare earths, they priced the rare earths at a floor price that was a premium to the market price. And if we can get
110.
some,
Yeah.
yeah, and if we can get something like that in America, where there's a domestic lithium price above 20,000, then get very exciting because it is the biggest, best lithium deposit in the US of A. All right, so there's our share structure: 175 million out. We have options, so it's almost like an Australian stock. I mean, we're not quite there. We don't have a billion shares out, but I think Australians are much more comfortable
Oh,
with
yeah.
that.
To be Australian, you have to have billions of shares.
Exactly. But we're not there yet. But we did just complete a raise. We did 20 million. So we'll update this in a week at 25 cents for the 5 million. And then this will be updated then.
We wanted to talk a little bit more about the news. You did, talk a lot about how it was like a process, like you've been talking to this group for a while. What would you like? How do you see, say, the next 12 to 18 months? What are you seeing that is coming in relation to the partnership?
Well, that investment by Evolution is going to allow us to do the PFS. So, we're drilling now, and that's funded. And then, as you know, it's the engineering phase that's going to be key to this thing. And that's really where we're going to, spend our focus probably in the first quarter, first half of next year is on the engineering. I alluded earlier to some of the things that we can do to improve on the economics. One of them is beneficiation. That's upgrading the mineral head grade right at the front. Usually that's just through some easily shaking and separation. There's gravity separation. We had some success. I think we can have more success, or the engineers are telling me we can have more success. And the higher grade that we can feed through that plant, the better the economics are going to be. So we're really going to spend some time. We're going to put VJ to work. VJ's our
He's still working. He's
he's still
fantastic.
working. He's still working. He doesn't know how hard he's going to have to work next year, but I'll put him to work.
He sends me messages every now and then. He just says, "Hi, how are you?" Like, he's so nice.
Yeah, he's been really good. So like I say, I was fortunate to bring Ian and BJ along and help out. They're basically, Ian's rolling up his sleeves and working on the time frame for the PFS, and being the sergeant and making sure everybody's doing their job, and so we can deliver on time. And VJ is going to be the guy who's going in there and he's going to mix up the secret sauce and tell
Yeah.
us when to put the right chemicals in at the right time, or not. Right? I mean, it's up to the chemical engineering process, and I'm confident we have the best. And we'll be spitting out 99.999% purity battery grade lithium at the end of this. And what we hope to do is get those OPEX numbers down a bit more. They're very good compared to all our peers. They're about 5,000 a ton. And if you look at Thacker, once they're at their higher end and peak production, it's like 8. So I really think if we just keep hammering away at this project and de-risking it, it will become painfully obvious, if it's not already, that this is just as good, if not better, than Thacker. And if that's worth $1 billion, then I do think there's going to be an exit strategy or an interesting M&A opportunity. We keep alive and then keep the thing going.
The comparison with Thacker Pass is obviously not only dessert but very obvious. Like when you look at the numbers, initial numbers for you, construction figures and very advanced information for them, but it does paint a picture that, okay, so this is the next Thacker Pass. And as you say, because the grades, they have good grades, but you guys have even higher grades. So
Gooder. Is that a word? Gooder.
uh, I think like just the fact that these are the world is not used to these clay deposits. Like this was Thacker Pass was something really kind of new-ish, like because it's not something that happens as often as hard rock and brine. Like those are doesn't mean that it's easy, because lithium I don't think anything is easy because of the cycles that we've been talking about. But when you think about the scale, because I think probably one of the worries that investors may have is because the capex for these projects are so high. Like how do you navigate the path to that? Like, so you're talking about, like, in this case, you're trying to build a way to reinforce what you're doing because you know that that's a difficult thing to do, right? So is that why you're thinking more of an exit, an M&A, more than like, okay, we'll continue going through the whole route, or is just because of the Canadian sort of strategy of more, okay, we'll do the deal and then we'll get out of the way?
Well, I think it's a good point. I mean, we don't want to dress it up and say, "Hey, this is all M&A." I mean, we'll act like we can get it done ourselves, but the reality is, we'd have to add a lot more talent to the company if if we get to the point of PFS and there's no M&A activity or options. We will have to go it alone, and we will have to beef up the management and beef up people who built these things before and access, the billions of dollars. We are making inroads into the government in Washington, doing the same things that Thacker did to get the $2 billion. And one of the key things too, with us bringing on Evolution, that now we're only responsible for a third of it. And we have a $20 billion partner who can fund their third. So, you can also think about, we've got a lead order if we need it, which is very interesting. One of the analysts picked up on it, and I think that's very smart because it's not a significant amount of capital. If they had to get into this and build it, they do have the financial wherewithal and capability to fund their end, which is key for us. And I do think, like Thacker attracted GM, there are other players in the universe that don't have access to domestic lithium, and if that's what they need, well, they will be knocking on the door. So I'm a build it and they will come type of fellow and taking that approach. And all we can do is what we can do, which is just de-risk it. And the world will unfold as it will. And just this type of project will attract interest.
Yeah. Yeah. It's like you were talking about before, like you've done the sort of thing before where you find an asset in an early stage of development, you build it up so that it's first understood, because obviously you need to make sure that it's good, as you were saying, like, is this actually true? Is this, does it stack up? And then you continue doing that development or pre-development work so that it's at a point where someone else, either the partner or someone else, can come in and fund what needs to be done, which is, it's a
Yeah,
bit
it's
hard.
developing it, but I mean, the key thing is de-risking it, right? It's
Yeah.
just taking all the risk out of it. So, it's
Yeah.
exactly what it says. You get a feasibility, then you do a bankable feasibility. And what's that? Well, it's something that you can bank with, right? So it's taking the risk out for everybody, including the bankers. And look, the biggest risk that I see, and you alluded to it, just a few minutes ago, was, this is new. It's relatively new. And so were brines back in the day in Argentina. That was all new too. And people spent a lot of time and had made a lot of mistakes along the way before they finally figured out how to perfect that. And that's what's going to happen here. And luckily, we do have Thacker, which is the pioneer and leading the way. And people have spent a lot of money and putting up a lot of money. So I'm fairly confident that they've de-risked it, but we do have to see the proof in the pudding. And the biggest risk for us would be if that thing fails. If it fails, then we're going to have a very hard time convincing people that ours won't.
Yeah. Hopefully it doesn't. Hopefully it doesn't.
I'm just the realist. But on the flip side of that too, if it's successful, then there's a big jump in market cap from where we are to where we're going to be if that's proven to be successful and our projects is proven to be better. So it's a pretty good risk reward for us, and we wish them all the best. We're cheering Thacker pass on.
Yeah, no, absolutely. And the other piece of this, I think, is the US focus. So obviously we were talking about high capacity. Yeah, that's all, like, it's all happening because of what, I mean, it's not just because of what's happening in the US, but it's sort of being supercharged because of what's happening in the US. So a company like them and many others that were normally focusing on other countries, because the US had so many years of not a lot of activity. Like, you look at the NASDAQ listed companies, for instance, you look at I love always looking at the heat maps, and you look at how small the energy or non-energy minerals is, the sector. You compare that to Canada or Australia, and it's a different picture. It's obviously, there's a reason. Like, we know that there's a reason. But I think just the fact that having an asset, an advanced, not advanced in terms of technical, but advanced enough asset in the US now gives you a very big opportunity to really capitalize on that blue sky that is not just you, but it's like the country wants blue sky because they want the stuff, the
Yeah.
product eventually.
Oh, they've come out and it's a lot like back in the 80s. I mean, I'm sorry, I'm older. I remember the 80s. We had an oil embargo and an oil crisis, and then what had to happen? Then the United States developed a made in USA oil policy and a strategic reserve for oil, all to combat OPEC because they
Okay.
couldn't be put at the mercy of. The Saudis wanted to turn the tap on or off, and people wanted to drive in the summer, and we had all those. 90s, we had lineups at the gas pumps. People were worried about getting gas. And, then America developed its own independent energy policy. And I do think that's what we're seeing now. They're developing an independent rare earths policy because they can't rely on China. They don't want the Chinese magnets and everything else that goes into their industry to be affected by political events. And they have to develop their own infrastructure. And critical minerals is key. Rare earths are key. Copper is key. Lithium is key. So it's going to happen. And I think, given that there's only one small piddly, lithium mine in the US producing 5,000 tons, that's Albemarle Silver Peak. There is there is no lithium production in the US. So when Thacker Pass comes on at, 80,000 tons at the start, and maybe let's say it gets to 150, it's still only 1/3 of the domestic consumption, lithium consumption in the US. You're going to need 2 or 3 Thacker Passes to meet domestic demand. And it's just a matter of time. I'm just waiting for the day that, President Trump comes on and does the same thing he did with rare earths. And although he's not really a fan of EVs and lithium, but, maybe I thought with Elon he would be, but it doesn't matter. I mean, once you have battery plants and capabilities in the US, they're going to need to source domestic lithium. And I think the same thing will happen that we've seen with the rare earth space and the uranium space too. We've seen, the uranium space was dead for years, and now it's, the greatest thing. So it's, as we talked about earlier, it's all cyclical, and we'll just keep grinding away until our turn comes.
Absolutely. Yeah, I think it's a good time to have an asset in the US. It's a good time to be kind of setting up for what will come, because it's not an if. Like, the lithium sector will return because it's, as you just said, it's a cyclical thing, and we met in a previous cycle. Like, these things go, and like, if you know to look for the signs of a build up, like, you get an advantage over people that are just, hiding in the ground saying, no, this is just terrible. Like, you have to have this sense of okay, this is not here yet, and it may not come here for the next 6 months or so, but it's coming. Like, you can start to sense it, I think. And I personally do.
Well, I like your enthusiasm, but like you say, you've been here before. I've been here before. I remember I couldn't raise a dime at Millennial Lithium one year. I can't remember what it was, like 18 or 19. Nobody would answer the phone. And then all of a sudden in 21, everybody in there, is tripping over themselves because they wanted to be involved in it. So I feel the same way that this will happen again in the space. And all we're going to do is, I feel fortunate now with evolution and the current capital we raised, we can ride out another 15 months of a down market. And, if and when the market turns, hopefully, we'll be there with a PFS and advance this project, and it will be one of the ones that survived. And has prospered.
Yeah, yeah, absolutely. Well, I think that's. Is there anything else that you think that you haven't said or that we need to add?
No, I think that covers it. It was just great to talk to you and see you again. It just reminds me of the early days when I started this thing. Like I said, I had the flashbacks to when your dad's taking me around to meet all the vendors. It all started, with your dad introducing me to the Morenos, right?
Yeah, yeah, that was a good time actually. To like a quick quick background is like we as you mentioned before, we helped you back when I was here already. I don't was Synergy, yeah, was Synergy was alive already, but yeah, we helped you find one of the assets or the core asset for the Millennial Lithium deal, and we kept in touch over the years, and I think it will be really good to see another, even though we're not involved in this one. Which means maybe we were lucky. My dad is not around, but we are. I am. My brother is.
It's right down where everybody else has been buying. It's right where I started at 25 cents. It ran up to a buck 30, and now it's right back at 25. So it's come full
Yeah,
circle.
yeah, yeah. One of my partners was looking into it, but we'll see. I'll keep talking to them. We'll see what
Yeah,
happens.
absolutely. And look, if there's any, I was gonna say synergy because you've got
Yes,
evolution.
say it. Say it.
Synergy. Evolution's well known. Evolution isn't as well known in North America, right? It's a big Australian name, so maybe some of the funds should pick up on the fact that, hey, if they're going to put 10 million bucks into this thing, and trust me, I do want to tell you one other thing. Evolution spent a lot of time and due diligence on this project. They even hired Fluor as their advisor, and it was funny because when we were on the phone talking to Fluor was so excited about the project. It was like we had hired Fluor, and not Evolution. Fluor is advising Evolution now through the JV. It's interesting that the people they hire are just as enthusiastic about this project, if not more than we are. So it's kind of funny.
That's fantastic. You can't get a better fan than your
No,
your other party's advisor. If they are a fan of yours, then that
yeah, it
it's
was pretty
done.
easy. I think when we were on the deal, they were telling them to shut up because it was becoming more expensive.
That's fantastic. That's fantastic. All right. Well, thank you everyone for watching this episode. It was a great time to talk to Graham. As you know, we've known each other for a few years, almost 10 years, I think. Yeah, and yeah, we'll if you have any questions for Serge, just leave them in the comments below. Thank you, everybody. Bye.